Welcome back, D-traders. Our analysts are ready to share their red-hot market analysis, news and trends. The US stock market had a good day on Wednesday, having halted a long-lasting losing streak. Major Wall Street indexes closed with modest gains. The three benchmark indexes closed in the green yesterday. The Dow Jones edged up 0.2%, both the Nasdaq and the S&P closed 0.4% up. The indexes are trading higher in the New York pre-market. The intraday corridor for the S&P is seen between 3,840 and 3,910. The Nasdaq extended gains for 3 days in a row, including Wednesday. The growth was driven by Apple and Amazon stocks that revealed their strongest performance. 10 out of 11 sectors included in the S&P went up, except the energy sector. Thus, the US stock market is showing remarkable resilience compared to European equity, commodity and currency markets gyrating in the perfect storm. American stocks are gaining ground bit by bit. Nevertheless, Wall Street needs market catalysts to gain momentum. Meanwhile, investors are in the wait-and-see mood in anticipation of the government data on the US labor market. As for the weekly update on unemployment claims, the figure for the last week again was worse than expected. The US Labor Department reported that the number of initial unemployment claims increased by 4,000 to 235,000 last week, more than the consensus for 230,000 new claims. The print indicates tough labor conditions, though the change is not critical as much as previous scores. The data will hardly spark the market today because investors are alert to the non-farm payrolls which are due tomorrow. Meanwhile, traders are still digesting the Fed minutes. The document displays the determination of Fed policymakers to fight against high inflation, though there is a faint hope for a broader and aggressive monetary tightening. The minutes read that the federal funds rate is expected to approach or slightly surpass its long-term level at the end of the year. The Fed will determine the appropriate pace of a further monetary tightening to the extent required by economic conditions. Analysts interpret this message as follows. The Fed will raise the key interest rate by 75 basis points in July and will decide whether to take a pause. Rate hikes serve a headwind for stocks. For the time being, the market has already evaluated the Fed's hawkish rhetoric and priced in the rate hike in July. Stocks of companies with a mega market capitalization such as Alphabet, Amazon, Apple, Meta, Microsoft and Tesla are trading higher in the New York pre-market. Market participants await speeches of two fierce hawks, James Bullard and Christopher Waller, who are likely to shed light on the viewpoint of the hawkish camp inside the Fed. Their remarks could put investors on edge again. The US dollar index is trading at highs within 106.80 and 107.10. The index is not poised to overcome these levels for fundamental reasons. The greenback is telling its growth today because of the brave efforts of its major peers. The euro tried to regain its footing but slipped again by 0.11%. Hovering above the parity level. Today, the euro remains under pressure as investors are waiting for the ECB minutes. The regulator has not raised the key interest rates yet in its struggle with inflation. Today, the pound sterling has come under the spotlight. The political jitters in the UK calmed down after Boris Johnson agreed to resign as the leader of the Conservative Party, but retained his office as the Prime Minister until October. The British pound surged 0.55% in light of the news and dipped afterwards to 1.20 against the US dollar. The loonie is holding the upper hand against its American rival. The corridor for today is seen between 1.2950 and 1.30 with a downward bias. Oil prices rebounded today after a two-day slump. It means that energy investors are again shifting focus towards limited supply, away from recession fears. Brent crude jumped 4.01% to trade at $104.59 a barrel, and WTI leapt to 4.26%. Amid a pause on the greenbacks rally, the Canadian dollar will be able to strengthen at about 1.2980. Apart from oil prices, the loonie found support from the upper report on Canada's trade balance. Canada's trade balance deficit widened to 5.3 billion Canadian dollars in May from 2.2 billion in the previous months, much higher than the expected deficit of 2.2 billion. It's the largest trade deficit since August 2008, as exports expanded 4.1% on a month to the record 68.4 billion Canadian dollars thanks to high energy prices. The crypto market is trying to recover. The dynamics are similar to the one in the stock market, though digital tokens are less optimistic. Bitcoin is trading firmly above 20,000, trying to climb and settle above the next support at 20,500. Nevertheless, the move higher seems complicated. If the bulls secure the price above $20,500, the price could rise to $20,650. Otherwise, the crypto will retreat to the area of $19,800 and $20,200. To sum up, despite the optimistic market sentiment, nerves of Wall Street investors are jangling due to remarks from Fed's hawkish policymakers. Trade at a profit with the InstaForex and see you tomorrow.